Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is November 5th, 2025, and we have some major volatility to discuss in the Bitcoin market as prices have taken a dramatic plunge. First, we're going to cover the breaking news and macroeconomic factors that are shaking investor confidence. Then, we will dive deep into the BTC charts to see what the technicals are telling us. The headlines are painting a grim short-term picture, with reports of Bitcoin crashing below the critical $100,000 level for the first time in months. News outlets are highlighting a market in extreme fear after losing key support around the $109,000 mark. Analysts are attributing this sharp correction to several factors converging at once. First, there's been a massive liquidation event, with over $1 billion in leveraged long positions wiped out, amplifying the downward pressure. This deleveraging event is a major theme, with some sources reporting an average of 300,000 traders being liquidated daily. Second, long-term holders and even a 14-year-old whale have been taking significant profits off the table after Bitcoin reached new all-time highs above $126,000 just last month. This profit-taking signals a shift in sentiment among some of the largest and oldest market participants. On the macroeconomic front, the ongoing U.S. government shutdown is a significant headwind, creating a liquidity squeeze across all financial markets, including crypto. With an estimated $1 trillion locked up in the Treasury General account, there's less capital available for risk assets like Bitcoin. Furthermore, cautious comments from Fed Chair Jerome Powell regarding future rate cuts have also contributed to a more defensive investor posture. Despite a recent rate cut, the expected liquidity boost has failed to materialize in the crypto space, with ETF inflows stalling and digital asset treasury activity drying up. Bitcoin's dominance is also on the rise, indicating a flight to relative safety from even riskier altcoins, which have seen even steeper declines. Now, let's switch over to the charts to see how all of this has played out in the price action. Looking at the daily chart, we can see the broader context of this recent move. After a strong uptrend that began in mid-2024, Bitcoin put in a spectacular rally, culminating in a new all-time high of $126,296 on October 6th. However, the price was unable to sustain those levels, forming a major reversal pattern. The selling pressure began to mount, but the real damage started on October 10th with that massive red candle, a more than 7% drop, which we now know was fueled by historic liquidations. Following that, the price attempted to consolidate in a range roughly between $108,000 and $115,000. That range has now decisively broken to the downside. Yesterday's candle for November 4th is particularly bearish, a nearly 5% drop on significant volume, slicing right through the psychological $100,000 level. The low of that candle at $98,892 is now the immediate short-term support level to watch. The previous support zone around $106,000 to $108,000 will now likely act as major resistance on any bounce attempts. Let's zoom in on this recent action since the beginning of October to get a clearer view of the breakdown. Here you can see the peak on October 6th, followed by the sharp rejection and the October 10th liquidation cascade. The price then chopped sideways for the latter half of October, failing multiple times to reclaim the $115,000 area. This period of consolidation built up a tremendous amount of energy, which has now been released to the downside. The break below the range low of roughly $108,000 was the final technical warning sign before yesterday's plunge. That previous support has now become a ceiling, and bulls will have a difficult fight to get back above it. Now let's drill down to the 15-minute chart to analyze the anatomy of yesterday's dramatic sell-off. For most of the last few days, the price was hovering around the $110,000 level. The initial sharp move down began around 15:20 Universal Time coordinated on November 3rd, but the real capitulation occurred yesterday. We can see the price holding precariously above $106,000 before a massive wave of selling hit around 5:20 Universal Time coordinated, sending us toward $104,000. After a weak bounce, the floor gave out completely around 2000 hours Universal Time Coordinated. This is where we see the price slice through the $100,000 mark, bottoming out just below $99,000, confirming the fears reported in the news. Since that low, we've seen a volatile bounce, reclaiming $100,000 for now, but the price action remains extremely fragile. The key battleground on this time frame is clearly the $100,000 to $102,000 zone. Failure to hold this area would likely result in a swift retest of the lows near $99,000. So, let's go back to the daily chart and recap what this all means for traders and investors. There are several key levels to keep on your radar. Immediate resistance is now the $103,000 level, followed by the much stronger zone between $106,000 and $108,000, which was our previous support. To the downside, initial support is the low from yesterday at $98,892. Below that, the analyst target of $99,000, which also represents the 75th percentile cost basis, is a critical area. If that level fails to hold, the next major support zone from the chart is between $93,000 and $96,000. Finally, the ultimate bearish target mentioned by analysts is the $90,000 region, which would also fill a long-standing CME gap, making it a powerful magnet for price if the selling continues. Now for some unbiased predictions. In the short term, the path of least resistance appears to be down, so I'd place a 65% probability on a retest of the $99,000 support level. This bearish scenario would be reinforced if we see continued macro weakness and a failure to reclaim $106,000 in the next few days. A sustained break below $99,000 significantly increases the odds of seeing the $90,000 target. For a bullish reversal, which I'd give a 20% chance in the immediate future, we would need to see a very strong, high-volume reclamation of the $106,000 to $108,000 resistance zone. This would trap shorts and could signal that the sell-off was a shakeout. A resolution to the U.S. government shutdown or a sudden surge in ETF inflows could be catalysts for such a move. There is also a 15% chance that we simply enter a volatile consolidation phase, chopping between $99,000 and $106,000 as the market finds its footing. Things to watch for updates on the U.S. government shutdown, any statements from the Federal Reserve, and weekly ETF flow data. That's our analysis for today. Thank you for watching Explain the Charts. Please remember, this is not financial advice. The crypto market is extremely volatile, and you should always do your own research and assess your risk tolerance before making any investment decisions.